All right, let's get started with part 2 here. Now this one is maybe a little bit more basic for this chapter, for this homework set in general. But here we're going to take an adjusted trial balance and just do a income statement and a classified balance sheet based on this. I could have you do the statement of retained earnings, but it's kind of a necessary step to get what ultimately goes in the balance sheet, but I just didn't have you do a formal presentation of that because it's included in other places, so that's why I just didn't want to, seem like maybe a touch repetitive in that case. There's already enough repetition in here as it is, so I just wanted to maybe curtail it a little bit in this case. Excuse my voice, just terrible right now, allergies and whatnot, just the way it goes. All right, so here, first we're going to do the income statement. So again, what's the necessary piece of information from what you're looking at here in this adjusted trial balance? So again, we have $600,000 worth of debits and credits. Everything balances out. So now, again, that permits us to go ahead with the financial statements. So all we care about is everything from fees earned down to miscellaneous expenses. That's it, because that covers the, all of your revenues and expenses in this case. So it's pretty straightforward. Here's your only revenue account. And everything you're looking at here is all expenses. So that's what you'll observe here for the income statement. So we just have, again, our semantic is name of the company, Tom Sawyer Corporation, what statement we're doing, income statement, and then for year ended, in this case, December 31st, 20-something or other. I just left it a specific. So our one revenue will be listed here under fees earned, and then we'll have a list of all our expenses. Now, again, I just went with how they were shown here. In other words, I didn't try to go with any convention where I put our largest first or anything like that. That doesn't tend to work out perfectly in practice anyways, so I don't overemphasize it because it really isn't that big of a deal. So I just listed out all the expenses as you saw them on the previous slide in that order. So there's depreciation expense on autos, buildings, salaries, supplies, repairs, and then finally miscellaneous expense bringing up the rear. So we get total expenses of $98,800. Take the difference, and we get a net loss because we get a negative number here. So we get $24,300. Now again, you're going to have to fundamentally do a statement of retained earnings, at least a sketch of one, so we'll just do that right now. So we take our beginning retained earnings balance, 288. So we got our 288 here. Ooh boy, that got away from me. 288, and there you got your 3 zeros. So we're going to subtract 24,300 from that. And we're also going to do what? We're going to subtract the dividends of 12,000. So minus an additional, so minus $12,000 more. I'll just abbreviate that with 12K. And that'll give you $251,700. So $251,700 as your ending retained earnings balance. That's the balance we're going to use on the classified balance sheet. So for that one, you need everything from retained earnings. Again, not that number though, right? This number here is old, so that's the one thing we're going to ignore. We're going to use the number that we just came up with just a second ago. We're going to do, again, classified balance sheet. So that means we want to take our current expenses, put them in one section there, and then we'll have our fixed assets in another section. And then we'll have our liabilities, current liability section first, a line for long-term liabilities, and then common stock and retained earnings. So that's how it'll be classified right there. So first, our three current assets will be up. So again, semantic here is straightforward. Name of the company, name of the statement, and then in this case, remember it's a point in time, so it just says December 31st, 20XX. That's all we have there. So there's our three current assets listed out, again, in order of liquidity. Can't argue that. Cash always going to be first, most liquid. Next, most liquid would be accounts receivable, and then we only have like prepaids like supplies, so just you stack those up however you want. So that's a total of $139,200 for current. Now for the fixed assets, I just did those net of accumulated depreciation because I give you the numbers here. So in other words, I took 150 minus the 25, simplified that to 125, 200 minus the 35, simplified that to 165. That's a common format you will see in corporate reports because it's just a simplifying, assumption. If you care about what went into the accumulated depreciation numbers, usually look to the footnotes of the financial statement for that information. So our total fixed assets are $290,000, added together, and we get $429,200 as our total assets. Right now for our liabilities, we have our three current liabilities here: AP, notes payable, salaries payable. So total those three numbers together here. That's what you're going to see right there. So they total up those three numbers. We get total current liabilities, $67,500. We just have a single line for long-term notes payable because that's the only long-term we have. So just plug it in as just one line there. Oops, keep going. 65. So there's your total liabilities, 132.5. And then common stock was listed at the 45 you see here. With that 45, and then last component is the updated retained earnings balance. So ending retained earnings as a consequence of the loss and the dividend payments is 251.7. Add that to the liabilities, and you'll get the same 429 too. So that means our assets are equal to our liabilities and shareholder equity. And remember, anytime you're looking at your statements like this, the best you can say is that you did everything mechanically correct. It doesn't mean you didn't make any mistakes, it just means you didn't make any mistakes. It was detectable based upon the system as it exists. In other words, there was no debit and credit mistakes, and there was no accounting equation mistakes. So nothing of that nature entered the system, so you at least did everything mechanically correct in the process of your financial statements. So now remember, once you get to this step in the accounting cycle, you're pretty much almost done. All you got left is just closing entries and your post-closing trial balance. So to be continued, this third homework set in the next video, so I'll see you there.